What's up, everyone? It's Scotty with Money Vesting. Do we have a party on our hands? Comment party. Comment Christmas is coming early. Comment happy days because markets are selling off and the deals are rolling in. Super excited for that. I actually did a video yesterday, if you guys remember, talking about how not to take the bait just yet because markets are still very much in the context of a downtrend. We're not out of the woods yet. And well, guess what? We are lower on the day. So we've got the S&P 500 down about 1.4%. The markets are still open for another 4 minutes, but we are now breaking down below 4,300. The NASDAQ here also lower. So it's down a little bit over 1.5%, so over 1.5%, trading just at 13,000, breaking down below our support that we identified in our previous market updates. And the Dow Jones here also dropping a little bit over 300 points, almost 400 points on the day, down a little bit over 1%. And in the yields, the 10-year yields continue to move higher, now hitting as high as 4.5.5% on the day. So hope you guys are doing great. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. The reason why this is so important is because if the markets continue to sell off, as we mentioned and talked about in our weekend videos going over the seasonality, there are going to be deals. There are going to be opportunities. There's going to be opportunities for us to dollar cost average into and invest more heavily as the markets continue to roll over and we start to see more and more stocks come down to our shopping list, our fair values, our intrinsic values. So if you want to get access to all these alerts and figure out exactly, okay, what's in the shopping list, what are the stocks that we're actually buying, what are the stocks our community is discussing from all over the world, right? We're talking about stocks constantly in our Discord. We've got the fair values, we've got the shopping list, we've got the options plays. Everything's going to be included with that 16% annual discount. Literally, a lot of members have joined recently, so I want to thank everyone for being a part of our MoneyVest community. And again, 4 more days for that 16% annual discount, so link's going to be down below. And there's, I think, a couple more spots left. I did open up a few more this morning. So we'll love to have you on board. And again, link's going to be down below. I also mentioned in our Discord earlier today, literally about a few hours ago, saying that let the markets drop. There's no fear. There's no stress. We've been preparing for this. So this is not a surprise. This shouldn't be a surprise for anyone. Yields and the dollar moving up will continue to put pressure on equities. And cash is king right now. And remember, let the prices come to you, right? There's no rush. And we will have a good dollar cost averaging window opening up here very, very soon. So again, if you want to get access to all those alerts, link's going to be down below. So this is the state of the market. Amazon here down 4.4%. I believe there were some antitrust, regulatory issues with Amazon, which is obviously driving this move lower. But Apple down 2.4%, Microsoft down over 2%, Oracle down 3%, Google down 2%, Tesla's down over 1%, Nvidia and Meta holding up really well, only down about 0.5%, but the entire market is red on the day. So almost all stocks, except for biotech, is actually pushing higher on the day. Everything else is red. Almost all sectors are down on the day, all 11 sectors. In the last 1 week, we've got all 11 sectors also red. And of course, in the last 1 month, energy is the only one that's pushed higher, up a little bit over 3%. Everything else is straight up down in the last 1 month. So 10 out of the 11 sectors are lower in the last 1 month. So this right here is going to be volatility pushing higher on the day, up a little bit over 9%. So if you come over to the VIX, getting up to over 19 levels here. So we are once again on the way up over 13% for the VIX. So very, very nice move to the upside. Next target and level is going to be closer to 20 that we have to watch on the volatility. And of course, that's going to result in potentially more downside for the market. And of course, all these other commodities like natural gas, live cattle, sugar prices, feeder cattle. We've got platinum, silver, euro stocks, everything rolling over and pulling back. Bitcoin just hovering around 26,000 and Ether also just a little bit under 1,600 as well. So Dow drops over 400 points on Tuesday, heads for the worst day since March of 2023. And August new home sales missed expectations, came in under contract, totaled 675,000 for the month, down 8.7% from July as well. And of course, the market right now is still very much on edge. In other words, investors are on edge, nervous about the rise in the bond yield, have to say about the economy, about the stock market, and about the Fed, as well as the value of the dollar. So I think investors lack clarity and therefore are deciding to lighten up a little bit. Now, this is something that I mentioned in my previous videos. I've been talking about this for quite some time. So please do not ignore the videos that I'm doing. So if you want to be sort of like on top of everything that's going on from a macroeconomic standpoint, I would highly recommend that you actually do check out these videos that I'm posting on the dollar, on the yields, on inflation, on interest rates, on FOMC, the summary of the FOMC, and of course going over these technical analysis on the markets as well. So you're very well connected with what's going on, right? Why the markets are moving the way they are, where's my fair value, what's the intrinsic value on the S&P, on the different individual stocks, and what's going on with the dollar, and of course with the bond yields as well. As there continues to be a lot of fiscal deficits from a fiscal policy standpoint, there's a lot of issuance from a corporate and the government side in the open market, which obviously is flooding the market with a lot of supply, and the demand isn't really that strong. And for that reason, we are starting to see, again, prices lower and yields continue to pop here, hitting highest levels in 16, 17 years, getting to highs of over 2007 levels, literally over 4.5%. And as the yields are pushing higher, the dollar index also continues to be strong. Both of them are putting pressure on equity prices, not just any equity prices, more specifically big tech, because they've got operations all over the world. A lot of their revenue also comes from non-US dollars countries, so like Indian rupees and Chinese yuans, and of course European euros and Great British pound, Swiss francs, even Australian dollar. A lot of these currencies that I just mentioned could potentially be depreciating against the dollar, which is putting more impact on the earnings on a foreign exchange basis for these companies, which is what the market is starting to price in. All that uncertainty, right? And not to mention the Federal Reserve obviously is a big uncertainty related to interest rates and whether they're going to raise, they're going to pause, and what type of cuts can we expect in 24. Many investors and analysts now expect Federal Reserve to cut rates in the second half of 24, and more specifically in the fourth quarter of 24 as well, right? So that's going to be quite a whiles away. That's going to be a little bit over a year away. And as I mentioned, I'm on the camp that the Federal Reserve maybe has one more rate hike left in 2023. And guess what? Rates are going to be higher for longer. Why? Because the economy continues to be strong. I think the Federal Reserve has made themselves very clear, and this is something I mentioned in one of my other videos. They've got a very clear message for us. And that message is that we're going to keep rates higher until the economy or the labor market breaks. If that doesn't happen, that gives them full flexibility to keep rates higher for longer and potentially even raise interest rates if inflation doesn't come down fast enough. As I mentioned in my previous videos, they're literally punishing the economy for being strong. They're literally punishing the labor market for being too strong. And the way they're doing that is by raising interest rates and by keeping them higher for longer. And that's obviously going to eventually put an impact on the economy, because higher for longer, as we know, the lagging effects are going to start taking into account very, very soon, which is going to impact overall economy eventually, which will impact the labor market, which will potentially impact earnings and thereby impacting the markets as well. But when all is said and done, when the dust settles, that's going to only give us the opportunity to dollar cost average at better and better deals. That's exactly why we need to be prepared. There is a window of opportunity opening up here, and I think there is going to be some time until that starts to close in. So we got to be ready with some dry powder. Now, going over to the S&P 500 in this chart, as I mentioned in my yesterday's video, don't take the bait, because just one green day doesn't do anything. We're still very much in the context of this downtrend. And I believe that we are still very much in the context of this higher low. So this higher low is still valid. And tomorrow it's possible that we do see a little bit of a dead cat bounce for the market. Costco was supposed to report earnings after the hours, after the bell today. So right now it's very, very flat. I'm pretty sure it was today. So Tuesday, September 26th after the bell. So it looks like they haven't reported yet. But as soon as the numbers come out, I'm expecting a lot of movement for just the markets as well. But S&P 500, wouldn't be surprised if we do see a little bit of a dead cat bounce, because we're coming up to this higher low, and we're very much inside this uptrending channel of higher highs and higher lows at the moment. And right now, of course, from a more short-term perspective, we are making these lower highs and lower lows, which is exactly what we have talked about. There is a lot of signs of weakness brewing with the S&P 500, not to mention a lot of individual stocks as well, which are showing signs of weakness, and that's going to create some more potential momentum to the downside. Same thing with the NASDAQ. We broke down below 13,100, so we are coming down to this lower low now, which is going to be sitting roughly around 13,000. So 13K is going to be a very, very important level of support for the NASDAQ. And like I said, we are very much in the context of this downtrend of making lower highs and lower lows at the moment. So signs of weakness. There is, again, some weakness brewing underneath these tech stocks, which is obviously resulting in the overall indices to pull back as well. So very important support levels at 13,000 on the NASDAQ. S&P 500, that's going to be that higher low, sitting roughly at around 4260s, 4250s. And the moment we break down, well, then the next support is really going to be down to 4175, down to as low as 4200 for S&P. That's going to be that next target. And for the NASDAQ, we're going to be watching as low as around 12,260. Although I don't believe that we're going to head all the way down to that level, but that is going to be a more important next support. Previous resistance levels potentially acting as a new support for the NASDAQ. But all of that is going to once again create opportunities. So these are not sort of bearish arguments. These are not FUD arguments. These are not arguments that I'm making that, oh, market's going to crash another 10% and the NASDAQ's going to be at 12,000, S&P is going to be at 4,100. Well, these are all happy moments, right? Happy days. Christmas. Christmas is coming early, so we can dollar cost average and once again start to deploy some of that dry powder back in the market and take advantage of those deals. So starting with Apple first, and Apple here obviously selling off down to 170, 196. After hours, it's at 172, so that's a very, very strong area of support that Apple's been validating for quite some time, and we're very much in the context of this downtrend. So lower highs and lower lows, obviously, and that right there is going to be that support at $172 per share. And of course, if you do end up selling off even further, the next support is going to be 162, possibly even down to as low as 150. So this right here, previous resistance potentially acting as a new support in the 157 area for Apple moving forward. Of course, that is going to be a pretty sizable decline here for Apple, considering that it's trading at 172 right now. That's going to be another 8 to 9% pullback for Apple from its current levels. As Apple, as I've already mentioned, is a stock that does trade at a pretty expensive valuation. Amazon, on the other hand, continues to sell off. We talked about the breakdown for Amazon. We consolidated a little bit sideways for a few days and then selling off right back down to 126. Right now, we're just 2 cents off of 126. This was a support level that we talked about in our previous videos, and that is still a valid support. We'll find out what happens tomorrow with Amazon and, of course, the entire market. Wouldn't be surprised if we do see a bit of a dead cat bounce, but, of course, Amazon selling off because the FTC hit Amazon with a lawsuit alleging anti-competitive business tactics. So it wasn't the European Union, but it was the FTC pretty much hitting Amazon with that lawsuit. But nonetheless, of course, that's pretty much a regular day at Amazon because a lot of these big tech companies are always struggling and fighting with the FTC. But support level is going to stay put at 126 right now for Amazon. Talking about Tesla. Now, I did a video on Tesla earlier today, so make sure that you do check that out if you haven't already. But this right here is going to be that higher low for Tesla. That's going to be sitting roughly at 240. You'll notice low for the day, 241. And again, we've talked about that green circle. That's going to be that support. That's also going to be that higher low for Tesla at around $240. But a more dedicated and more specific video was already done on the company, so make sure that you do check that out if you haven't already. Talking about NVIDIA. So NVIDIA here selling off a little bit, 74 basis points, so holding up really, really well. And I'm actually quite surprised that considering the higher yields, considering the higher dollar index, and the NASDAQ dropping as aggressively as it is, NVIDIA is still holding up. This thing is insane. This is defying all logic and all law of physics, like literally law of gravity. It's just defying all of that. Like you'd expect, on a day like today, when even Apple is down 2.3%, Amazon's down 4%, on a day like today, when the NASDAQ is down 1.5%, you'd expect NVIDIA to be down like 4, 5, 6%. No, buyers are too strong. Buyers are too stubborn. That's what I'm going to start calling NVIDIA, is synonyms with a stubborn stock. Doesn't want to come down. That support level is going to stay put at about $400 per share. That's going to be that level to watch. Of course, we've talked about the valuations. We've talked about a lot of different things with NVIDIA, but $400 is going to be that support. But very, very strong buyer sort of profile here with NVIDIA because everybody wants to be in that stock. So any type of dip comes in, people start to buy back in. And AMD here, we did break down below $100 per share. So we're back down to 96. Of course, that is going to be that resistance level to watch for advanced micro devices, and that next support level is going to be down to $80 for AMD, and that's going to be in line with this previous support from back in May of 23, right? So we saw a very nice rally for advanced micro devices, 62%, and of course since then we've just been trading inside this downtrending channel, lower highs and lower lows. We broke down below $100, and that next support really is going to be down to $80 per share for advanced micro devices. Talking a little bit about PayPal, and PayPal here pushing higher a little bit, 12 basis points, more or less flat, and that's probably because it is trading out of support So this right here is PayPal's support level, once again getting validated at $57. So surprisingly outperformance, right? And you think, why is PayPal outperforming today? Well, I think it's mostly technical because, we did see a lot of support here at $57, $58. I didn't see anything that was particularly fundamental driven for the company. I mean, if you come over to the news section, you've got, crypto funds could jump from 50 billion in assets, 650 billion in the next 5 years. Nothing that was very PayPal specific that resulted in, PayPal pushing higher. Nothing really that was moving the stock, but yet the outperformance, right? Pretty significant outperformance if you ask me. And $57, $50, if you already pointed out, is a huge support for PayPal. Square, on the other hand, also down 1.7%. So, continues to sell off. Next support is going to be at $42, $43. So this right here is going to be that level to watch for Block. I already did a video on Square earlier, so make sure that you do check that out. We do a full analysis on this company, and I break it down, fundamental-wise, what's the company's potential, what's the intrinsic value, what's my, hesitation with this company, what are some of the yellow flags, red flags, everything we discussed in a previous video, so make sure that you do check that out. Meta is another company similar to NVIDIA holding up really, really well, like surprisingly well. And, this is the lower high and the lower low pattern, but it continues to trade sideways at around $299, $300 per share. So it's really just been trading sideways and consolidating in that range. And that lower high is going to be sitting right there. And that lower low, of course, is going to be over here. Next support is going to be all the way down to 257, 258 for Meta moving forward. So that right there is going to be that overall downtrending channel for Meta. But very similar to NVIDIA, continues to be incredibly strong in the way that it's been trading. Netflix, on the other hand, continues to sell off, down about 1.4%, very similar to the S&P 500. Next support, of course, is going to be sitting inside this green rectangle, so that's going to be that area of support, area of demand, and that green rectangle for Netflix. It is starting to look a little bit better from a swing trading perspective. I mean, oversold RSI, oversold MACD. This does seem like a pretty good entry point where you could take a trade and create a stop loss sub 375, sub 370s with a resistance target up to 395 to as much as $400. But I just feel like the market right now overall isn't going to support that trade idea on the reversal side, because Netflix in itself alone is not going to see that reversal and the market continues to decline, right? It's going to happen together. It's going to happen with all tech sector like getting a lift, the NASDAQ getting a lift, which I don't really see that happening right now, considering we broke down major support. We're trading, in that lower low and lower high pattern. So there's a lot of weakness. So though I do believe that Netflix does offer that risk reward trade-off opportunity from a swing trading perspective, it's also a low probability trade because the overall sector and of course the market is not in that sort of headspace right now where it can validate that reversal back to the upside. Hope that makes sense. So that's going to be the support. We'll see. I mean, if Netflix continues to consolidate sideways a little bit while the market continues to drop, and that's when we can start to see, okay, there is opportunity here, because if you do see some bounces in the market, if you do see some rallies and reversals in the broader markets, that is possible that lifts the Netflix higher. It's going to give us a nice opportunity to trade into. But right now, support level inside this green rectangle, resistance at 390 at close to $400. Talking about Google. And Google here starts to sell off even further. We talked about that breakdown for Google on this chart. So that was a rising wedge pattern. And you'll notice that we did see a little bit of a breakdown. We talked about that next support at 126. And that is going to be that next level to watch over here, of course. And that resistance all the way up to $144 per share for Google moving forward. Talking about Microsoft, and Microsoft here continues to sell off, support level at $311. We talked about this level right here as a very important level of support and an area of demand. And guess what? We are literally trading at that price. Of course, if you end up breaking down, that's going to be a new lower low for Microsoft, as we have already validated these two lows. And of course, if you get a breakdown, next support is going to be down here for Microsoft. That's going to be all the way down to as low as $297 to as low as $300 per share. Resistance all the way up to $327, $320 per share for Microsoft as well. And finally, we do have Shopify and Enphase. Shopify here also selling off pretty aggressively. So that next support really is going to be all the way down to as low as, well, actually, we do have a gap to fill here, which I do believe that Shopify can indeed fill over the next few days. It is possible that it does come down to low 50s again. Right now, it's already at 51, so 50s, sub $50, kind of fill this gap in. And that next major support is going to be sitting at roughly around $44 per share. in line with this previous resistance, and that's going to be that next support level to watch. And finally, we got N phase ENPH, and N phase here just consolidating sideways. I do believe there's a lot of accumulation happening with that positive bullish divergence that's also taking place with the RSI moving up, and the price itself continues to trade sideways. So that's where we are with the entire market. Patience is going to be the name of the game, folks. You have to be patient. Don't go crazy with these red days and just start literally blowing cash into the market. Wait for the prices to come to you, right? Just be patient. And, if you want that extra motivation and if you want that shopping list and our intrinsic values, again, link's going to be down below for our Discord. We'd love to have you on board. And again, if you have any questions, reach out. As always, happy investing. I'll see you all in the next video.